All right, Fed's still behind the curve, but I think they did take a big step Wednesday, and I think many more steps are necessary. Former Federal Reserve Governor Robert Heller joins me now. People, just to refresh, not that Bob Heller isn't a household word, but he was part of the Reagan appointees in the middle 80s with Wayne Angell and Manley Johnson, and they showed us how to use market prices as guidelines to keep us with 10 or 15 years of price stability. Bob Heller, welcome back. So 75 basis points was pretty good, and they could have done 100. What do you make of it, Robert Heller? Tell me what you make of it.
I'm all in favor of it. I've been in favor of raising rates for a long time because the money supply has been growing way too fast in past years, and that was one of the key causes of the current inflationary pressures.
I don't see, Bob, I'm looking very carefully at commodity indexes, what you and Wayne Angell and Manley, and Greenspan for that matter. So I'm watching the CRB spot, but I'm also watching the CRB futures commodity curve. You know all about that. That does include gold and oil, but also includes industry and metals and farming. It's off, Robert Heller, but it ain't off much. You follow me? I'm sorry we don't have a full screen picture of it, but it's off. But it's not off very much compared to the rise of the past 2 years. That troubles me, tells me the Fed has much more work to do.
Exactly. Commodity prices will feed into producer prices. Producer prices then feed into consumer prices. And once that feeds into wages, then basically the battle is lost because they cannot be easily reversed, these wage gains. So it's a process. And we have been seeing that process work itself just like a pig through a snake that has been swallowed by a snake. Slowly, you can see the animal being digested, and that's the process we're in right now. But the Fed has to do its job and stop that particular process from happening.
Looking at that process, as you call it, consumer prices, producer prices were very strong last month. So were consumer prices. Import prices, despite a relatively strong dollar, also were still very strong. I mean, it just seems to me, Robert Heller, this idea of peak inflation is incorrect. We've got many more months to go, and even then it's going to be very sticky if it ever comes down.
I agree. I think towards the end of the year, we'll see price increases, consumer price increases of around 10%. Oh. So bad news is still to come.
That's a tough number. And what would your estimate? I mean, let's look at the Fed funds rate for a second. 75. Smart people like Larry Lindsey are thinking, and I think 75 yesterday or Wednesday, 75 in July, 75 in September, maybe another 75 before the end of the year. Is that sufficient, or should they go 100, 100, 100? How do you see that as an old Fed governor?
Well, my own preference would have been, first of all, start earlier with the tightening and do it at a pretty rapid pace. You want to get this period of misery behind you rather than having it always in front of you. So, again, 200-300 basis points for the year, certainly, and hopefully more.
Can we avoid recession? Last word, sir. Can we avoid a recession?
I think we're already half in a recession.
Yeah.
Last quarter, we had negative growth. We have flat growth in the current quarter, probably according to GDP now. And there's more bad news to come. So we're at the beginning of a recession and maybe a little bit of a double dip. I don't see a very strong recession. Labor markets are strong right now. Consumers still have money, but they're getting suspicious and they're postponing big purchases.
That's an interesting point. I hadn't heard anyone talk about a double dip. That's a very interesting point. It's not a full-blown recession yet. Interesting. Robert Heller, we will talk some more. I want to thank you for your contribution, sir. We'll talk soon. Thanks very much.